Hey, this is Matt from InvestiQuant. Today is Monday, March 1st, 2021. Today is the first trading day of the month. This first trading day of the month is coming on the heels of some selling pressure in the markets. We closed at recent lows on Friday, and today we are starting the first trading day of March. So what I figured we'd take a look at this morning is what has happened historically when you are gapping up like we currently are on the first trading day of the month following some weakness. So let me go ahead and set that up and discover. We'll use all four instruments. The setup is based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, we're currently trading up quite a bit this morning, so I'm going to go into the opening filters, add gap up from the gap direction category. Then next, I'm going to go into the price patterns library, and I'm going to say that the prior session closed at the lowest closing price of the past 5 sessions. So I can do that just going over to the active today section and grabbing 5-day low close, first option here from the new lows category. It's also right here in the new lows category first option. So either way, we'll add that to the test. Next, I'm going to go into the indicator section. I'm just going to put above a 200-day simple moving average. Usually I use a 10 and 200, but I want to keep as many samples as possible. And by using that 5-day low close, that is putting a little bit of weakness in here, which is kind of similar to being under a 10-day simple moving average. And lastly, I'm going to go to the calendar section, and I'm going to say that today is the first trading day of the month. That's the first option here in the unique days category. And now I can hit view results. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap up on the first trading day of the month following a 5-day low close that is above the 200-day simple moving average. Historically, this has taken place 32 times in the S&P dating back to 2003. We've got 25 samples in the NASDAQ, 34 in the Dow, and 26 in the Russell. So similar sample sizes across all. If you add them all up, we are a bit over 100 samples there across all 4 instruments. And if you look at the win rates on them, 3 of the 4 are pretty favored. You've got the S&P coming in at 72%, the NASDAQ 68%. The Dow, the only one that's not really favored, it's coming in at 53%, and then the Russell is similar to the S&P and the NASDAQ at 69%. So 3 of the 4 instruments have strong win rates. One of them has a neutral win rate. If we look at the average moves up, average win, average loss, the average win for the S&P is not as big as the average loss. For the NASDAQ, it's the same, where the average loss is larger than the average win. The Dow, fairly similar in size, average loss just a little bit larger than the average win. And then the Russell, fairly similar in size as well, average win just a touch bigger. So as a group, it looks like the win rates do favor the long side here this morning, historically speaking, and the average losses have been a little bit larger than the average win if you're looking at it as a group. So hopefully you found that helpful. Good luck today, and we'll see you next time.